Welcome to the Defense and Aerospace Report podcast. I'm your host, Vago Muradian. Our podcast is brought to you by Bell. Since 1935, Bell has been redefining flight. Learn more about its pioneering spirit at bellflight.com. Joining us now to discuss the week on world markets are Dr. Rocket Ron Epstein of Bank of America Merrill Lynch, Sash Tusa of the independent equity research firm Agency Partners, recently decamped in Wales, and Richard Abulafia of the Teal Group Consultancy here in Washington, D.C., or more specifically, somewhere in Rock Creek Park. Everybody, thanks very much for joining us.
Great to be here, Vago. Thanks.
Thanks, Vago. Good to be here.
Hi from Rock Creek, Vago.
Before we get started, our global coverage is sponsored by Leonardo DRS. Northrop Grumman sponsors our weekly cyber report and our cyber coverage overall. Fincantieri Marinette Marine sponsors our naval coverage. Elbit Systems of America's sponsored our coverage of the virtual Quad A and SOFIC conference and trade shows, and Bell, of course, sponsors this podcast. Ron, why don't you start us off? Crisis between the United States and China clearly is getting worse. The president talked about some measures, most importantly, rescinding special status on Hong Kong. And all of this is playing over or against a backdrop where some of the smartest people in the markets have been making clear that there's something we've been discussing on this program for some weeks, a disconnect between how the market is behaving and economic reality. And the market corrected a bit last week, ending a little bit stronger, I think, than people expected, because what everybody was wondering what the rescinding of Hong Kong special status means for the economy. Talk to us about some of the broader market trends, and I kind of want to go around the horn for how you think all of these elements are going to shape markets going forward.
When you think about what's going on in the market, conversations we've been having with investors and many of my peers have are, the market's trying to look through the current economic situation to some anchor point in the future that the market thinks is more normal, in quotes, let's put normal in quotes. So the market's trying to think about, its valuation relative to an economic situation where we're not in, this induced coma, right? But we're in a more normal economic situation. And then the debate really has become among investors, has it gone too far? How quickly will the market recover? So on and so forth. And the volatility you're starting to see in the market is just that debate going on. So this reopening trade, as it's been called sort of in investing circles, so the reopening trade's kind of played out, and now it gets harder, right? So things are going to reopen. We're seeing that happen. Well, what's next, and how long does it last, and what's the shape of the recovery? I think a very important data point comes out this week. I believe on the 1st of June, you're going to see at 9:45 in the morning the PMI, manufacturing PMI, and that could be a pretty meaningful indicator. Meaning, if the PMI comes out, and this might be counterintuitive, comes out a little bit higher than people were thinking, the market's kind of already priced that in, and you could see the market sell off on that. So it's going to be an interesting week on trading, because you're going to start to see these economic numbers hit after the initial shock and awe of what's going on. Now we're in the wake of what's going on. And in commercial aerospace in particular, conversations I've had, it's been around, we've seen some of the commercial aftermarket players come rallying back. You've even seen the airlines come rallying back off of meaningful lows for the airlines. But the big question is now, it's like, all right, so what's the shape of the recovery look like? And just to remind everybody, if we go from being down, 90% in air travel to down 70%, we're still down 70% in an industry that needs a capacity utilization of 85% to make money, right? So it's still not like the industry is in great shape, and that's what the market has to digest now.
What about China? And how is China playing into the conversations that you're having with investors, and what the senior leadership at the bank are thinking about where this goes?
Yeah, right. So I can't speak for the senior leadership at the bank, but I can speak about the conversations I've had with investors, and it's starting to make its way into the conversation, where I think the China situation, if you will, on some levels was really not in the mainstream investment community. It's making it there now, and just like we highlighted a couple of weeks ago, the movements we're seeing in the semi space, particularly around microprocessors, and Taiwan Semi building that plant in Arizona. This week, right, we saw a bipartisan proposal, I think, come out of the Senate on offering $100 billion of money to the National Science Foundation to have National Science Directorate or something like the Technology Directorate to underlie fundamental basic research out for the next 10 years. That's $10 billion a year. And then I think there's some press this weekend that the U.S. semis industry is looking for something in the order of $35 to $40 billion of tax incentives and other incentives to bring more semi manufacturing back to the States. Right. So I think that's how you're starting to see it really emerge into the investment community. When you start seeing those actions happen, it makes it really real. Right. It's no longer, a strategy discussion in, sort of the high atmosphere with, defense people, but now it's real. Right. You're really starting to see it impact, corporate CapEx decisions and, industry strategy.
Sash, and then Richard. Same questions, but want to really get your take on where you see everything going.
Look, I think first of all, China is clearly an issue that is affecting markets, but it's affecting markets in Europe in a pretty intermittent way, frankly. I think markets in Europe were more taken by the hopes of a coronavirus recovery last week than they were dragged down by China and Hong Kong. That's not necessarily going to remain the same balance over the next couple of weeks. But a lot of European markets have, and this actually reflects some European politicians as well, are slightly looking away from what is going on in Hong Kong because it is not conducive to the sort of economic recovery that European nations need and therefore that they're looking for. That's not a terribly pleasant conclusion, but it certainly won't. So we got fewer incoming calls about China this week than I expected, frankly, many fewer. The calls we were getting and the calls we were making were much more about is the recovery in air traffic going to occur? Is there a broader recovery in civil aerospace? Should we be chasing civil aerospace stocks up? And a huge number of people were, certainly from our perspective, were worried that they had missed the bounce. We don't think they have at all. We think actually that we're going to get a bit of a bounce in civil aerospace stocks, and then we're actually going to see another many quarters of cuts while the companies react to what is really a very unattractive market environment. But investors, certainly over here, their inclination is to want to buy, because they think this will be as quick a recovery as after the global financial crisis or indeed after 9/11. And time will tell, but probably not very much time, whether that's the correct way to see the impact of coronavirus or not.
Richard?
On China, it's just becoming very obvious that this isn't working out. And there's two possible scenarios. One, of course, is, conflict. And the other is a repeat of the old Soviet experience, where basically they just go their own way. And we have two very different trading zones and economic ecosystems and aeronautical ecosystems. The third possibility that things will go back to where they were is, that's like 5% maybe. So, let's assume it's not conflict. Let's hope it's not that. And let's assume that we're looking at the creation of another Soviet Union in which the terms of trade, the economic competition angles, and whatever else are just completely different. But, China has been such a huge part of every aerospace recovery for the past couple decades. But starting before the pandemic in 2018, it was already clear that they weren't going to do that this time. Something has gone wrong with their economic and air travel growth and whatever else. So, in other words, I just, under no circumstances do I see China aiding in our recovery in any meaningful way. The prospect of a long-term split between China and the West is just, even foul tasting ice cream or icing on an already bad tasting cake, or some sort of metaphor like that. As for the aerospace companies and whatever else, I can't help but wonder, and I'll throw this out for Ron and Sash to discover to consider too. It just seems that there's an awful lot of talk of M&A activity as a result of serious weakness, particularly in the second and third tier in the event of a prolonged downturn. So perhaps part of the thinking in share prices is driven by the prospect of M&A activity. I throw that out for discussion.
Everybody discuss. Well, so what do you guys think of Richard's premise, right? I mean, we've talked about how M&A is going to realign things. We're looking at big changes in the airline industry, right? I mean, airline and cruise stocks really kind of surged last week, even though, as Ron said, the fundamentals aren't there. Lufthansa joined Air France KLM, in terms of bailouts. Right, Norwegian had news. Sash, you noted that in the conversation where investors have pretty much, there's been a change in ownership there as well. How do you guys see the M&A environment developing as you look at each one of these selective bits, all the way from, Boeing announcing 6,000 job cuts, right? Every time you announce job cuts like that, it has sort of knock-on implications. We've had Rolls downgraded by S&P, even though I don't put a lot of stock in ratings agencies, especially after 2007, 2008. What are some of the dynamics we're seeing that's going to shape the M&A environment? And do we see that firming up at all at this point?
I mean, I think that it is too early in this down cycle for a responsible company to be looking at M&A. I mean, possibly in defense, but certainly in civil aerospace. I think looking at M&A as a voluntary act is the purest case of catching a falling knife that I can think of in these markets. Until we have some idea of what the bottom looks like and when the bottom is likely to occur, M&A up to then, I think, is going to be essentially involuntary. I think it is going to require. It's going to be a case of companies rescuing their suppliers, but it's not going to be a case of companies actually going out and sort of trying to gain market share, because there's not a lot of point in gaining share of a market that is still falling. And therefore, when you find it very hard to price the asset that you're buying. I mean, it's very interesting you brought up Norwegian. Norwegian's a fascinating case, because it's not a state-owned carrier. It's not like Air France or KLM. It doesn't have a natural country that is prepared to back it absolutely to the hilt. And Norwegian effectively had to go to the lessors who were supplying it with aircraft and say, convert our lease liabilities, our debt with you into equity, or else. It's sort of very blazing saddle, actually. And Norwegian went down 47% at one stage this week, as it went a massive rights issue and debt to equity conversion. So you've got a stock here that the 12-month high in Norwegian was 44 Norwegian kroner, and it dropped below 3 kroner. And it really confirms the old story that a stock that's fallen 95% is one that's fallen 90% and then halved. It's very, very ugly indeed. And I think, with the exception of the big flag carriers, and by definition, there's only one other of those in Europe, and that's IAG. A lot of the second-tier airlines are going to find it very hard to finance or refinance, except at huge cost to their equity holders, in our view.
And it's worth pointing out that it's about 10 krona to the dollar. Am I right?
Yeah, that's right. Okay. Yes, it still makes a beer incredibly expensive in Oslo, but we all know that now.
It also lets you know that the stock, whenever stock, there you're at penny stock level. Ron, Richard, how do you guys sort of see the broader environment, the M&A environment, and then the jobs environment in sort of a conjoined way? Because I did throw quite a number of different topics at you guys.
I think Rolls-Royce is a pretty good illustration of that. God knows it's going into a serious downturn, already having come out of a very difficult place, and with a not very sound strategy behind them, a really not great product portfolio mix, exposure to exactly what you don't want exposure to. Probably the worst thing the equivalent of a radioactive rock in this industry is aftermarket exposure to the Airbus twin aisle market. Oh my dear God. Yes, I'm not always sure I understand the ratings agencies, but this time I think I do. But on the other hand, maybe this is just the time to think about M&A activity. And yes, I agree completely with Sash that it is probably akin to catching a falling knife or something along those lines. But it might help, shall we say, the outlook, the picture for investors to think, okay, what's the end game here? Because Hopefully it won't be something catastrophic. Ultimately, someone will step in, either an acquirer or the UK government. And I think all of these are probably in investors' minds that to an extent, many of the aerospace companies in this industry are simply too big in their own way to fail. Whether it's because of mandatory vertical integration from first tier suppliers, or prime stepping in to secure their supply chain, or from governments, a lot of these guys are just too big to fail or too important to fail.
Let me jump in here,
Sure.
just to follow on both Sasha's and Richard's comments. I actually agree with both of them. It's probably too soon for firms that are, looking on a shorter term investment horizon. I mean, if you're just trying to look at maybe, 2 years, 3 years, something like that, it's hard. But if you're private money, it's probably not. So I wouldn't be surprised to see, some of the financial sponsors out there become more active in the space, particularly in commercial aerospace. When you think about it from a strategy point of view of companies, one of the things they're going to be thinking about now is diversification. When you look at Raytheon Technologies as a case in point, what really kind of saved their skin, if you will, was closing the deal with Raytheon. Now they have this base of business, it's 55% defense, and you can kind of hang out there. And if you're an owner of Raytheon, you'll get a dividend. They'll pay you to wait for commercial to come back. That's not the case with a lot of the commercial companies. So I wouldn't be surprised to see private money more active. I wouldn't be surprised to see companies seeking some form of diversification. So that probably is a positive sign for defense assets, as suppliers try to get more defense programs, get into defense. You heard it, just this past week, Triumph Group reported, and they talked about their defense business. Spirit talks about their defense business. It's a market here where you want defense exposure. And then on the employment front, I mean, the thing that I find the most disturbing about the voluntary and involuntary layoffs at Boeing is the number of engineers that have been or will be shown the exit. Dominic Gates put out a nice article just a day or so ago, kind of summarizing that. And if you look at what's going on in Boeing Commercial, they're going to lose, as of now, about 12% of their engineering workforce. And of that, they're going to lose a large number of their technical fellows and associate technical fellows. So between the two of them, there's about 115, 120 or so of those folks. And those are really, when you think about the technical fellows and the associate technical fellows at Boeing, they're the deep intellectual horsepower in that company. And to have those people leaving, I find as a scary prospect, honestly, right? And having 12% of your engineering force, going out the door, granted, you got to resize the company, so on. So I get it, but are those the people you really want to leave? Because they are the intellectual capital, the intellectual horsepower that's going to drive, product development and product sustainment for the future.
Yeah, but I mean, isn't that a continuation? I'm sorry to interrupt, Richard, but I mean, isn't that a continuation of, for lack of a better word, the jihad that senior management has been waging against the engineering workforce and the SPIA union for going on 2 decades now?
I mean, just from a data perspective, it would seem so. Yeah, right. I'm uncomfortable characterizing it as whatever it is, but having that number of highly qualified engineers leave the company, I find worrisome. Right. I mean, they're the folks you don't want to see leave.
Right.
Ron, would it be?
Not that you want to see anybody leave, to be fair, right, to everybody, but I mean, they're really the ones you want to keep.
Yes. If
Ron,
you were
would
strategic.
it make you more comfortable? Ron, would it make you more comfortable if you sat in a nice chair while saying that? Because it seems like it would be very comfortable and appropriate to say
that. No, but I mean, right. I mean, McNerney shut company production down because the SPIA union, whose contract was outdated. I mean, we were talking about sort of $50 million a year for all of those people, and the top 4 people made $80 million in that same time frame, right? So it just sort of puts into perspective what a company will fight for and what it perceives as a threat or a problem that may actually not be a threat or a problem. right? I mean, creating manufacturing in South Carolina was a way to get around the union, at the end of the day. I just want to talk a little bit. So do you guys what's your impression? Is this 6,000 cut from Boeing the beginning of a tip of a much bigger iceberg, or is that sort of sufficient for them? I mean, where do you guys expect job cuts and sheet trimming to go if there's going to be a 15% delta with where passenger traffic will be, which we don't know whether or not it will even get to 70%, right? Which is 15% or maybe 20% less than what you need to be profitable in this business.
So it was 6,000 job cuts, the right number. I mean, I don't think they know, right? I mean, there's so many variables right now that we just have to see play out. It's a start. Hopefully it's enough, but it may not be enough. The things that I don't find encouraging are, there's 450 737 sitting in inventory. When you talk to folks in the aircraft financing community, you quickly hear that there's a lot of airlines that just don't want those airplanes right now because of everything we see going on. So it's going to take some time for those airplanes to get delivered. They restarted production of the 737 MAX this weekend, or not this weekend, this week. There was an announcement of that. And they're at a higher rate with their suppliers than they should be on the line. So they're going to be building inventory again. So it's, what's my point? The point is this, right? I mean, if things recover kind of slower, they're going to still have a lot of inventory and they're going to probably have to lay off more people. If things recover a little bit better, then maybe it's okay. So it's one of those things where truly, for lack of better description, it's sort of Kentucky windage, right? I mean, they're going to have to adjust as things go. Hopefully it's the end, but it very well may not be.
Sash?
Look, very quickly, 6,000 job cuts is nowhere near enough for the depth of the downturn that we are forecasting, but it is far too many for Boeing then to be a healthy company and to be able to respond in an upturn and develop new aircraft. So they're going to get the worst of both worlds with these cuts.
They're going from rate 0 to rate 20, and then in theory, rate 31 within a year or so on the 737. That's really labor intensive, especially when accompanied by having to modify and depickle 900 and something existing jets, which means that all these cuts are probably coming out of product development resources. And at a time when they're basically a one single aisle product company. They've got the 737 MAX 8. Below that is the A220, and they don't have Embraer to help them compete there. Above that, the A321, which is really the only jet that's maybe somewhat bulletproof from this whole atrocity. And they've got really nothing to compete there. The MAX 9 and 10 just aren't up to the job. So basically, they need to do something to avoid complete marginalization, especially since the broader market is seeing a secular shift away from twin aisles to single aisles, which is going to benefit Airbus. I think it's incumbent upon Boeing to prove all of us wrong and say, nope, we're going to put cash into new product development at a time like this. It's absolutely the right thing to do. But they seem to be doing the exact opposite.
Let me just ask a quick ratings question. Do you guys expect any other ratings downgrades?
Yeah, I think we're going to see ratings downgrades occur through most of the rest of this year. Companies are still responding to this downturn. I don't think we're going to see the production cuts coming through in Airbus. We'll clearly get some announced in June, but I think we'll probably see more production cuts announced through the end of the year. And it's only going to be when the rating agencies understand what the full effects of the cash flows are like end of 2020 and through 2021 that we'll see the ratings trough.
What I want to try to get is your guys' sense. There were a couple of storylines that we've been following. Italy has said that it's going to honor its commitment to the F-35 no matter the COVID economic impact. We've got India's decision. We discussed its preference to buy the Tejas, the light combat aircraft. That appears that the Indian government is moving in that direction. And then there's an amusing proposal about what should happen to A380s and how the French Air Force might be able to use them. Let's just go around the horn on what you guys think on each of these. Maybe let's start with you, Sash, because you're in Europe and you do pay very close attention to Leonardo, and then Richard's take, given as from an international market perspective, you guys track each of these three elements, and then Ron, get your thoughts as well.
Yeah, okay. First of all, I'm in Italy. I wouldn't use Italy as an example to follow of how any other European country will manage its defense programs. I mean, the Italian defense industry is tightly integrated with the industry ministry, and they do things for very clear industrial reasons. I'm not sure I know what the Italian commitment to the F-35 is. So to say that they've reiterated it, it's not worth a huge amount. Does that? I suppose if all that means is, well, they're not going to cancel the program because they're not bust yet, then yeah, that's a mild positive. But I don't think that's something that I would want to take to the bank. And I certainly wouldn't want to use the read across from that to apply to other big European or indeed international F-35 operators, of whom the UK, Netherlands, Norway are standouts.
What about the Indian decision and then the A380 proposal?
Yeah, the Indian decision, I think, is actually much more interesting. I mean, we talked about this the other week. The Tejas light combat aircraft, it is very light, but it's not a combat aircraft. So, it gets sort of 2 out of 3 in that respect. I mean, clearly flies.
Ouch.
Deciding to go from a competition where you had in the finals basically the Dassault Mirage, the Lockheed Martin F-16. I'm sorry, I can't bring myself to call it the F-21, and the Saab Gripen. You had 3 very, very fine aircraft.
The Rafale,
even if the F-16
wasn't it? Wasn't the Rafale?
Sorry,
yeah,
I apologize. The Rafale. And to go from that to say, well, our new combat aircraft is going to be the Tejas. That's an act of industrial politics. That's not an act of military procurement. Fine, every country is allowed to do industrial politics like that. But this is not going to solve an issue of the overmatch that the Indians perceive the Chinese have got over them, because putting Tejas up against almost any aircraft that the Chinese might want to put up is not going to be a terribly attractive process. Personally, we think that Dassault is going to sell at least one extra batch of 24 plus Rafales over the next couple of years, if only to keep the Indian nuclear capability as current as it possibly can be. But it's clear disappointment for Lockheed Martin and for Saab. I think they've just got to say, look, if the Indians want to make decisions like this, we can't play, because this is not a rational decision.
And the A380 concept?
Oh boy, we really need to start a new program here. This is a make jobs. Again, it's industrial policy, isn't it?
Wait, and tell everybody what the proposal is at the end of the day.
The proposal, as I understand it, is that some of the 913 A380s that Air France is getting rid of should be converted into military aircraft for the French Air Force. And that's great if all you want to do is to carry personnel around and you basically just paint the aircraft grey. But I can't think of a more unsuitable military aircraft than the A380. And I say this through gritted teeth because I love the A380 and I've been proven massively wrong by Richard, and that hurts, clearly. But A380 as a military aircraft, it's got high ground loading. You cannot board it or offload it without air stairs and scissor container lifts for the pallets. It produces massive wingtip vortices, so you can't put air-to-air refueling pods on it, and you're putting an immense number of eggs into one basket. This is just not a military aircraft. If, in the event that you want to move huge numbers of passengers, military or otherwise, from one place to another, you need some aircraft like this. Go out and rent it from somebody, and if you end up renting 777s rather than A380s that have been put out to grass, you're not going to find yourself terribly wrong. But the idea that the French Air Force should be asked to inherit these aircraft and then nurture them for the next 15 years, I feel incredibly sorry for the French Air Force.
Richard, your take on all three of those topics: Italy, India, and your beloved A380.
Yeah, the F-35, I guess, is just a little too early to see. I agree completely. It's hard to read Italy's decision across a broad. I mean, the F-35 in South Korea has not been doing good. I think they've cut the budget for that a bit. We've got a steady state F-35 budget. It's just too early to say what the impact is, but I'm not overly worried. Tejas, I agree completely with Sash. Oh my God, it is hilarious, except if you value the lives of Indian Air Force pilots. I'm sure they have.
Okay, wait a minute. That's not fair. They were dying in large numbers in MiG-21s. The whole idea is to retire the MiG-21. I think that the Tejas is a much better airplane than a MiG-21 is. Okay, it for what it's worth. I don't want to be
better, not much better.
okay, right. Maybe not as deadly. I think we can agree it's not as deadly. But go on.
I think that's actually the title of their marketing brochure. Not as deadly.
Okay.
Unfortunately, that applies to the other side too. It's just not that deadly, as Sash said. It's the seed is sadly lacking. I mean, just consider the market environment or the strategic environment where the LCA was born. The big enemy was Pakistan, which of course is equipped with Chinese cast-off jets and third-hand Mirage 3s. And the main concern was, hey, how could we keep going against Pakistan if there's an arms cutoff? So the LCA was known as the last chance aircraft. At least they could deploy that. And this is 25 years ago. And Here we are, fast forward, and as Sash points out, the main enemy is really not Pakistan. They're having a seriously worrying confrontation with China in the Himalayas. And in that strategic context, you send an LCA. If it makes it far enough to crash into the side of a mountain, that would be an impressive technical achievement, but it certainly isn't doing anything good from the combat confrontation standpoint. So one would hope that wiser heads would prevail and they'd actually get something that wasn't even just keep going with Hindustan Aeronautics procurement of Sukhoi 30s would be a step in the right direction, you know? I mean, basically it's an issue with what they want. And frankly, they're just not thinking strategically, period, you know?
And do you agree with Sash on the A380?
Yeah, that's just a weird one because, you look at the A330, they've got that MRTT interior option, the multi-role tanker transport,
right?
And that would have relevance, but this is a double deck design. Right. And that middle deck just can't support anything like that. So what are you doing with this? You're going to have 500 lightly armed troops that check their luggage and then pick it up at the airport baggage carousel. What is the strategic contingency here? And not only that, but most intervention is in places like, Chad or Djibouti, conceivably you could deploy there. What's airport access like? I mean, in addition to the vortices and everything else that Sash raised, I just don't see the purpose aside from, rescuing Air France from its incredibly ill-advised A380 fleet decision.
It just is not an airplane that is a good freighter because it just doesn't have the floor loading and it doesn't have the hold cargo storage. So it's not like you get any benefits there. Ron, want to get your take on both SpaceX and how that's going to drive the broader space market. Obviously, an enormous achievement by the company, the first American spacecraft built in partnership with NASA and with two NASA astronauts aboard, Bob Behnken and Doug Hurley, who launched on Saturday and on Sunday rendezvoused successfully with the International Space Station. How does that drive the space market? There have been a little bit of concerns about Virgin Galactic and Virgin Orbit. Obviously also had a setback recently on a test. And I've got a follow-up question on the electric Cessna.
Yeah, so when you think about the space markets, what's really remarkable, wonderful about what SpaceX did, not to use the old cliche, but they've really boldly gone where no one has gone before, where it was a commercial launch, right? I mean, they did it in conjunction with NASA, but it was a commercial platform with a commercial capsule, and it was done in a commercial fashion, right? So not only is it a U.S. program, but it's a U.S. program done kind of under commercial terms, and it was done by a newcomer to the market. It's not one of the space alumni, if you will. So it's really quite amazing, right? So it's hard to imagine that won't energize, the market's juices when they start thinking about space. And it's even more remarkable to think about it. It's not just right on the edge of space where Virgin Galactic goes, but I mean, this is low Earth orbit. They're at the International Space Station. They did the docking. There's a lot of really complicated things that went down. The Falcon 9 landed itself, right? I mean, that whole second stage, the first stage re-entry, landing on the barge, that all worked out. So there was a lot of stuff that happened and went just like clockwork, like it should have. So, good for them. So I would imagine that, for space as a theme for investors, it'll shine a spotlight on that. But that being said, commercial space as a theme for investors is a real difficult theme to get at, right? It's really hard to kind of scratch at that one because there's just not many ways to play it. I would say this, I mean, it's bad news for the space alumni, right? I mean, the Boeing program, they're going to launch it later this year without anybody on it, and then the first chance they'll have to do it with as a manned mission is, I guess, next year, right? So the new guys on the block beat the old guys quite handily, right? So that's just the facts. On the electrified propulsion system on the Cessna, was it a Caravan? I think it is.
It's a Caravan, 14 passengers, all electric, 30 minutes of range. Obviously, it's an enormous achievement because it's actually an airplane of some size. Does 30 minutes do anything for you at this point?
Well, I think you got to think about it this way, right? So, the big issue that everybody knows is well known for the electrification of commercial flight is the energy density problem, right? And the way I think about it, if you have a soda can full of Jet A and a battery about the size of a soda can, that soda can of Jet A has orders of magnitude more energy in it, and that's energy that you burn off as you fly. So not only does it have more orders of magnitude more energy, it's energy that gets lighter as you go, right? So the challenge for battery-driven flight, electrified, is significant. That said, for certain missions in certain markets, so if you're thinking about shorter range missions within, and I think it's not that far to extrapolate. Something like this could eventually get to a 1 hour mission or an hour and a half, something like that. Right. For shorter missions in regional markets, true regional markets, short regional markets, there very well could be an application for an aircraft like that. This technology, though, however, applied to the bigger, large, 737 class type airplanes or A320 class type airplanes, not to pick one guy over the other, that's still many years away. Right. I mean, we might see some sort of hybrid technology, but there's probably a real place and a real market for this, right? It's a bespoke market for this technology.
There was that Magnix was the Harbor Air thing with the de Havilland Canada small plane. Everyone's working on these tiny little airplanes with very short ranges, and who knows, maybe there's something there, but the idea that that's going to translate to the kind of massive power packs you need to transport a larger jet, the energy density challenges and whatever else, that's just not realistic for many decades.
All right, guys, thanks very much for joining us. Really appreciate it and look forward to having you back on next week.
Yeah,
thanks, Vago.
Great to be here, Vago. Thanks.
And thanks for joining us. Please follow our daily interviews with top government, military, industry, and thought leaders at Defense and Aerospace Report, and subscribe to our weekly newsletter. Follow us on Twitter at DefAero Report. That's at DEFAERO Report. Like us on Facebook at Defense and Aerospace Report, and check us out on LinkedIn. And check out our weekly cyber report sponsored by Northrop Grumman. For more than 80 years, Bell has pushed past the boundaries of what's possible to drive aviation forward, going above and beyond flight. Bellflight.com. Thanks again to Bell for their generous sponsorship, and we'll see you again tomorrow.